Good afternoon and welcome to the weekly macroeconomics session for Friday, 17th of July 2015. David here. Sitting alongside me is Jeff Safar. Welcome to you, Jeff.
Thank you, David. Hello, everyone.
How's your week been?
Pretty busy.
Pretty busy, as always it is. I think next week, just while we're thinking ahead, Jeff, you're off to Sydney for Your Money, Your Call.
That's correct.
On what day is that?
Wednesday night.
Wednesday night, and on the telly from about what time?
I think it's 8 till 9:30.
8 till 9:30. So if you've got Foxtel, I think it is at home, tune into Your Money, Your Call on the Wednesday evening.
I think on Sky Business.
On Sky Business, yep. And you'll be able to see Australia's best stock picker for 2014, Jeff Safar, on Your Money, Your Call. All right, let's get underway. And first of all, our disclaimer: and the content of this presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, or particular needs. So please, before making any investing decision based upon the general advice presented in any of our presentations, please consider whether the advice is appropriate in light of your financial circumstances. Disclaimer underway. Just a quick reminder: the Academy is coming up at the end of August 28th through to September the 2nd. So if you haven't yet got your ticket or registered for that, get in contact with us here at Elite Wealth, and we'll be certainly more than happy to see you there. Great venue, certainly great topics. You'll hear more about this into next week when we send out our or formalise the contents, the presentations, the sessions, etc. So those of you who are coming along will be able to pick and choose which sessions. Those of you who haven't yet decided, certainly we'll get a bit more of an insight into what we're going to cover, and certainly encourage you to get along to that event. All right, coming up, well, first of all, the week in review. We've had NAB business confidence, the Westpac Bank consumer sentiment. We've had US core sales and retail sales. Bit of news coming out of Japan, China and the Eurozone. Let's go to the top of the list there, Jeff. NAB business confidence registered a 10 versus 8 over the prior period, and consumer sentiment, whilst it's still negative, was up over the previous period. What do you make of that?
Yeah, really interesting. Obviously, last month the markets and investors were dealing with Greece and China were the two big issues, and businesses in Australia decided to take a different tack to consumers. So businesses, obviously confidence improved on the month before, and that's the highest business confidence has been in almost a couple of years now. Consumer sentiment, on the other hand, obviously weakened 3.2% after a poor reading the month before.
Yep.
And that's quite a concern. We've seen fairly poor numbers since the budget a couple of months ago, and since interest rates were cut, but sort of the brakes were put on more interest rate cuts in the future. So consumers are fairly negative. Interesting in the business space, every single industry had reported positive conditions except for the mining sector, which came out square, I think.
That's not surprising, really, is it?
No. So it's not just one particular area of the business community that's feeling good about themselves. It's fairly broad-based, that one.
So just a question: I typically, as a forward-looking measure, you would expect business confidence to be leading consumer confidence. Is that typically the way that things would work? And then as businesses feel more confident, they start to invest, potentially employ more people, and that flows through to consumers? Or is there some other factor that has an impact on consumer sentiment?
Yeah, they don't have a sort of a perfect linkage. I mean, there is the theory that, like you said, businesses get more confident, they do more hiring, more investing, and that leads to consumer confidence and improved sentiment. But the two do feed off some different things. So as an example, if wages are low, then businesses are confident, then consumer sentiment is weak. So it's not as simple as that. Starts with business and flows. They tend to actually move fairly in line, but they do take their cues from slightly different things.
Okay, cool. In the US, we had core retail sales and retail sales. So again, just a reminder, what's the difference between retail and core retail?
So retail sales basically covers everything that consumers are spending money on.
Yep.
Core retail sales cuts out buying cars, buying petrol, all sorts of things that either tend to be lumpy in nature, or the price of that good fluctuates a lot. So if the price goes up, people are spending more money on it. It's not necessarily suggesting that they're actually buying more of it. So I like to look at core retail sales because it takes out some of those anomalies, some of those unusual bits and pieces. So core retail, you can see both of those measures really underperformed.
Yes.
Really were a lot lower than expected. A couple of, I guess, excuses. Some timing with public holidays over in the US, and also their school terms have been out of whack because of the blizzards at the beginning of the year. So some schools were shut down earlier, so they've added on school days. So there's not enough. There's been less, I guess, school holidays for parents and kids to go out and spend some money. So that explains some of it. But when you tie it up with other consumer focused indices and data, there is some weakness there in the retail and consumer space. So part of that is a genuine contraction in spending in the US.
Yep. Okay. And the Philly Fed manufacturing index there, 5.7 versus nearly 12. That's a fairly significant difference.
That's a pretty big miss, yeah. So that's a pretty big miss, and shows that the manufacturing sector has had a bit of a bump in the road. What's interesting is that 11.9 was a really particularly strong number. So for the rest of the year so far, that reading has been in the single digits.
Yep.
So it's a little bit less that the 5.7 is a bad number than probably more so the 11.9 was a spectacular number that may not have been repeated. So I did mention last time that the 11.9 was really strong, and it'd be interesting to see whether that could continue. It's not really a big surprise that fell away.
Producer price inflation, PPI?
Producer price index. But it does indicate inflation.
Yeah.
Up, ahead of expectations.
Yep.
And excuse me, despite a fairly strong US dollar, energy prices have rebounded a bit, and that actually came out in import prices are basically increasing in America. Consumer sentiment out tonight. Obviously a very important reading over there.
Okay. Japan, the monetary policy on Wednesday. Who's in charge over there? Not Mr. Okamura.
No. No, this was actually a really interesting one. So they had, we weren't expecting any change to the policy, but I did flag last week that maybe something in the third quarter of this year. So I said, look, don't expect anything this month, but in the coming months, don't be surprised to see a bit of a change. So what was really interesting is that this week the BOJ came out and said they trimmed their growth expectations a touch. They said, look, obviously we're a little bit less bullish about the economy than we were, but they left their inflation projections. So obviously inflation's been really low in Japan. They've tried to stimulate it back up to 2%. So they actually want more inflation, which is, as I mentioned last week, quite an unusual situation. And I think they're going to have to... There are signs that things are weakening and aren't really strengthening in Japan. Before long, the BOJ is going to have to come out and say inflation is tracking slower than we expected. We're pushing out our expectations, and because of that, if they want to bring that time frame back, they want to get inflation going, they're going to have to announce some more stimulus. So
more stimulus.
Yes, more stimulus.
So how long have they been stimulating the economy for in Japan, Jeff?
Since the 80s.
Since the 80s.
Look, they did have a very large stimulus in March.
Yep.
And on top of that, they've had quite a number of policy measures introduced in the last sort of 18 months. And look, they have those measures are having some effect. and they are moving some of the targets in the right direction, but it's just happening very, very gradually. And the Japanese don't want to overreact. They don't want to, I guess, continually going back to the same trough, but I think they are open to, if the signs are that it's not really happening enough, that they will go back for another round.
Yeah, certainly. Okay, so, and again, if you're wanting exposure to that particular market, the best way to do that?
Yeah, an ETF, potentially buy the index as well. The index will generally be more volatile than an ETF because, particularly recently, we've seen huge intraday swings in the Nikkei, whereas an ETF might gap up to reflect the previous day's trading, but then it won't have much intraday swings like the index will.
Yep. Okay. China industrial production there, 6.8 versus 6. A good number?
Yes.
Within expectations?
Yeah, look, so this is both of these I mentioned last week, things that have been sliding consistently for 4 years, if not more now, actually. Almost every single month. It's almost like someone's just drawn a line straight from the top left to the bottom right of the chart if you're graphing the monthly numbers. But the last couple of months we've seen some sort of steadying, and obviously continued not only just to hold its ground but to actually increase. And in line with these numbers as well, second quarter GDP figures were out, and that came in at 7% versus expectation of 6.9. I mentioned last week we'd expect to see something around 7%. So just despite all the gloom in the Chinese stock market and the volatility, the economy admittedly has had some mixed data recently, but this week has had some really good signs.
And follow through with the on the back of that particular news into the miners in Australia. Does that result in any move in those stocks this week? Yeah,
look, the miners have definitely bounced, and we've seen iron ore, I think, is up around 13% in the last week. That sounds really good, except it was down 25% the week before, so it's just really recovered sort of half of those losses. But yes, stocks like BHP have bounced. Interestingly, our energy stocks were, I think, the worst on the market this week. Still up, because the whole market was really strong this week, but energy has lagged. Material's been not bad.
Yeah, it's interesting that those fundamental ideas, just talking about those sectors that are particularly weak, from a technical point of view, we don't get to see any of those in our scans because our scans are looking for the strongest stocks, and they're the ones that are floating to the top. And so, quite conspicuous by their absence are the mining stocks and, as you mentioned, some of the energy stocks as well. Eurozone there, the German economic sentiment there, 29.7 versus 30.6. It's pretty close, given what's been going on in their neighbourhood recent times.
So look, they basically shrugged off what's been happening in Greece. It obviously missed by a little bit, but not too bad. Still well above long-term average levels. So overall, German analysts and investors are fairly positive about the outlook for the German economy.
Any news from the ECB press conference?
Look, not a lot, but they did sort of reiterate that they will, Draghi said they will do what is necessary, and kind of, continually leaving the door open for more stimulus. And that's, I mentioned last week as well, that's in a very similar situation to Japan. Didn't expect anything this month, but I think they've got their finger on the hovering over the button, break in case of emergency, and I wouldn't be surprised to see some more stimulus by the end of the year, if not in the next 2-3 months.
And that obviously having some downward pressure on the euro.
I mean the euro, I think last time I looked, it was down at 108, and some of its lowest levels in a long time. And you've got over in the US, Janet Yellen reiterated that she thinks rates will start going up in 2015. And then over in Europe, you've got Draghi saying, look, we may pump some more money in if necessary, obviously moving in opposite directions.
I think Janet Yellen was saying, wake up everybody and get with the party.
Yes.
All right, so let's go and have a look at what's happened on the markets this week from a technical point of view. There's our benchmark index for Australia, and as you can see, those that channel line that we've been drawing in for the last probably the last couple of months actually, have now been broken, which is good news. So strong movement towards the upside there, which is which is a positive thing for our market, and obviously a little bit of news out of China there being beneficial, and the US market itself picking up as well, and our market piggybacking on the end of that. Depending on what happens at the end of today, our worm on the bottom, our stochastic, looks like it may well move from being in very high risk, potentially ending up in high risk at the end of the market, but we'll just have to wait and see what happens at the conclusion of today's trading. So that's the XJO. Interesting, if we go and have a look at the S&P 1500, the benchmark in the US, I was just mentioning to Jeff before that we've really sort of now formed ourselves a little bit of a box play at this point in time, where we've put in similar highs, if you like, where we've got fairly major points of supply at the top end of this box, and certainly very major points of demand at the bottom end. So prices move very, very strongly back up. So this retracement from the top to the bottom, it's not uncommon for the market to experience this 2 or 3 times a year, and for the market to actually turn around, find support, and rip back up very quickly. And you'll see a number of occasions where this has happened in the past, where the market's moved down and prices moved up very, very strongly again. So I think it just goes to reiterate that whilst market conditions may be changing, to just keep monitoring your portfolio, don't go strangling your trades and trying to reduce risk in that particular manner, because you're only going to end up being stopped out. So just be vigilant, stick to your guns with your trailing ATRs in particular, and if the market is going to turn around and rebound, then you'll certainly be the beneficiary of that particular move. If the market does happen to continue in a downward direction, well, then eventually you'll be stopped out of those positions. If it becomes really extreme, you'll be out. You may have reduced some of your profits on your trades, or you may have capped your individual losses, and that's your aim as an individual trader, as a self-directed investor, to keep an eye on the capital and first and foremost protection of it. They were the main comments that I wanted to make this particular week. Just to recap and have a look at some of the other markets around the world. Again, Germany, very similar to the Australian sort of market in that we had this downtrend. Obviously, earlier in the year, very, very strong. Great market to be in. Again, easiest way to access this sort of market, Jeff, is through an ETF, rather than try and pick stocks from within a sector or a particular index. A lot easier to just trade the actual the underlying index through an ETF, broken out of its downward channel to the upward side. So again, that's very good. A lot of white candles through that, similar with a lot of the European markets at the moment. The Japanese index, obviously a bit of volatility of late, a bit of a movement down and back up. Obviously moving back up on the back of some of the comments from the monetary statements and things during the week in Japan. Again, another index again that you could access through an ETF.
Just actually going back to the Nikkei, you can see obviously how big some of those swings have been, and that bounce from that low candle.
Yep.
If you were trading the index, I dare say, you would have been stopped out on that day.
Yep.
If you had a fairly tight sort of almost like a day trading approach. But if we mentioned obviously that you can access these via an ETF. Of course, you can just go long the index itself, usually through CFDs if that's what you want to do. But people tend to do that with a fairly short-term time frame. You get stopped out, whereas if you were trading on an ETF that day, you just would have seen the ETF open basically flat, or if not up a little bit. And you would have withstood that big, almost 1,000-point turnaround.
Yep. So that's the Japanese market. Our friend China there, again, just huge volatility still within this market. Big moves to the upward side and downward side. The swings over this last week haven't been as big as previous weeks, Jeff, so hopefully things sort of getting back to normality there a little bit in that particular market. All right, so let's just head back to what's coming up for next week. We've had a look at the markets, so a pretty quiet week. We were commenting before, Jeff. Australia monetary policy minutes on Tuesday. We've got CPI quarter on quarter, and then Glenn Stevens speaking on Wednesday. Any forecast for any of that, Jeff? What do you think is going to happen?
Yeah, these are actually a nice, good three pieces that go through a nice three-piece band. We've got the minutes out first. I don't expect anything groundbreaking whatsoever.
Mm-hmm.
The actual rate statement this month was shorter than usual. They gave up very little information or insight, but I think the minutes will show that they continue to be happy with rates where they are, and they will probably conclude yet again that they will be guided by the economy in terms of what to do next. One of those things that they look at is CPI, one of the most important things they look at. And CPI has been on the slide for 18 months now. I don't expect that to change at all for the second quarter. And that's obviously a major piece of the puzzle. The RBA is not, at the moment, the next way the RBA is going to move is a cut. Mm-hmm. But they're not going to do that unless inflation is low enough. They've said inflation is likely to stay under control for the next 1 or 2 years already, so I think this will just confirm it. I don't think that they're going to cut rates next month, but this is just another piece of the puzzle that will allow that to happen eventually. And Glenn Stevens is not expected to reveal too much. He's come out with a few zingers recently, partially actually talking about the banking sector and some tax issues and budgets and things like that, the housing market. I think he'll stick to the similar topics again this week. Otherwise, overseas we've got a bunch of PMI figures, obviously in Japan and France and Germany. I'll start off with the Eurozone. In Germany, this has been sitting comfortably above the 50 level, the neutral level, for a while, and the French reading popped above 50 for the first time in a while last month. So, like to see those hold their ground above 50. In New Zealand, it's an interesting one. They've got the official cash rate. We did have a somewhat surprising rate cut by Canada during the week, and Canada is known as very much a commodity based economy, like in Australia and New Zealand as well. There's a chance that New Zealand will cut its cash rate next week to 2.5%.
Because New Zealand's one of the biggest suppliers of milk into the global markets, isn't it?
Yes, and dairy prices have been falling, I think almost halved in the last 2 or perhaps 3 years. So that's obviously, they're going through a similar kind of experience with their milk, what we're experiencing with iron ore and coal. It's obviously a major damper on exports, and then provides a bit of a hole in the budget. So, there's definitely some pressure on New Zealand to cut rates, and there's sort of an increasing swell that's going to happen, and that that trend, obviously Canada, possibly New Zealand, sets the scene for potentially another cut on the horizon for Australia as well.
Yep. Okay. Good background indeed. Well, that's it for this week, folks. Thanks for watching this afternoon, or whenever you are watching. For those of you in the Elite Traders Club, I will see you on Monday morning at 9 a.m. And Jeff, next time you'll be speaking with your members next week?
Yes. Should have a video out on a Tuesday.
And don't forget to keep an eye out for Jeff on Your Money, Your Call on Wednesday evening. Have a good weekend, and we will talk to you next week. Bye for now.
Thank you from me too.